Hi everyone, welcome back to Consolidation chapter. Today in this video we are going to see this bonus adjustment, what we have to do about this in CFS and how it will impact the working notes and everything we will see. Now first thing that should pop up in your mind is that what is the relevant part over here? Understand first. Here we are only talking about the bonus shares which are issued by the subsidiary company. We are not concerned about the bonus shares issued by the holding company. No, we are not concerned about that. Like how in dividend adjustment we saw that only the dividend that is issued by the subsidiary company is relevant and not the holding company. Similarly here, the bonus shares which are issued by the subsidiary company is relevant. Is that okay? Yes. Because only that will impact the CFS. Okay, holding company's bonus shares are going to outsider, so it will not impact anything. Is that okay? So the only thing that is important over here is the bonus shares issued by the subsidiary company. Is that clear? Yes. Now, if subsidiary company is issuing the bonus shares, then who will get the bonus shares? The holding company, the majority shareholder, and the minority interest, the other people. Yes, and they will get the bonus shares depending upon their control ratio. Of course, I mean depending upon their existing holdings. You can say. Fine. Now you all know what is bonus shares and everything because you have seen this previously, isn't it? Yes, bonus shares. Yeah, bonus issue is nothing but capitalization of profits, converting the reserves into share capital. Reserve is also part of shareholder funds and share capital is also part of shareholder funds. Yeah, this entire thing is net assets. So what is happening is just shuffling of net assets. See here, what will happen when subsidiary company will issue the bonus shares? When subsidiary company will issue the bonus shares in its separate financial statement, it will pass the entry that reserves account debit, reserves have decreased and share capital has increased with the same proportion to equity share capital credit. Yeah, this sort of thing will happen. So if you see this rectangle over here, a portion from reserves has gone into equity share capital. So overall in the shareholder funds there is no impact, there is no change in the net assets, in the entire equity, there is no change. It's just shuffling of the shareholder funds from reserves to equity share capital, that's all. Yeah, there is no impact. Overall net impact is zero, there is no impact. Okay, but the number of shares will increase. Previously if there were 1 lakh shares, 1 lakh number of shares, and let's say 10% bonus was issued, 10% bonus, so 10% of 1 lakh is 10,000, so number of shares will increase to 1 lakh 10,000, but the value will not change. The shareholder funds, the entire value will not change. It's just shuffling. From reserves, the amount has gone into equity share capital. The value has been transferred like that. That's all. Okay, that's all bonus shares are, right? It's just capitalization of profits. You all know that. Fine. So you understood what will happen in separate financial statements. Reserve will fall down and equity share capital will increase with the same proportion. Fine, you got that. And there is no impact in the net assets, but the number of shares will increase. Fine. We have seen this also in investment account chapter, isn't it, in the group 1? Yes. Now what will happen in the separate financial statement of the people who are getting the bonus shares, the investors, the holding company and the other people, the minority interest? See what will happen in their separate financial statement. See here, there will not be any additional cost, no additional cost, because see, bonus shares are given out of the existing net assets. Yeah, see, these are the owners of the subsidiary company, holding company and minority interest. They are the owners of the subsidiary company. They have the right to the net assets of the company, right? They acquire control. Who acquired control? Holding company acquired the control by getting 80% stake. So what does that mean? Actually they own 80% of the net assets of this company. Yes, so out of those net assets only, for which they have paid the money to acquire the portion of net assets, isn't it? Yes, so out of that only the bonus shares are given. Out of that only bonus shares are given. So there is no additional cost. Only reserves are converted into equity share capital. You cannot say actually it's free of cost. No, in the beginning they had to pay to get that 80% stake, isn't it? Yes, so the cost of bonus shares is included in that beginning cost only. Okay, is that clear? Because they are getting the bonus shares only because they have that 80% stake. Otherwise holding company wouldn't get the bonus shares. Yeah, you cannot say that bonus shares are free. Yeah, you will find that written everywhere that it's free, but it's actually in the truest form, it's not free. Okay, there is no additional cost. When bonus shares are issued by the subsidiary company, at that time there will not be additional cost. cost is already borne by the holding company when it acquired that 80% stake. Yeah, why am I explaining this to you? Why am I telling this to you? You will understand when we will go to the cost of control and everything. Fine, the working notes, right? Yeah, so that's the thing. No additional cost has already been borne. Fine. Okay, the second thing is increase in the number of shares. Yeah, what will happen? Holding company has the shares, right? 80% stake is there, so depending upon that stake they will get the additional shares, bonus shares, right? Because bonus shares are given to the existing shareholders only, so number of shares will increase but no additional cost. But percentage of shares held by holding company and minority interest will remain the same. What does this mean? It means that even after the bonus issue, even after the new shares have come into the picture, still the percentage, the stake percentage, this holding percentage 80 and 20% will remain the same. Percentage of shares held 80% and 20% by holding and minority will remain the same. Now you will be a little bit confused. How it will remain the same, sir? We all know new shares are coming into the picture, then of course there has to be some change now. Some change should happen, 85, 25, something like that. Yeah, sorry, not 85, 25, something, yeah, something should happen. Yeah, you'd be thinking that, no, it will not. Nothing will happen. Even after the bonus, this percentage is going to remain the same. Why? Because bonus shares are proportionately given, uniformly given, 1:2, 1:5, like that. Okay, 1 for every 2 shares held, 1:4 means 1 for every 4 shares held. What does this mean? It means that 1 share will be given, 1:2 means what? 1 share will be given for every 2 shares held. That means what? If you are a shareholder and you have only 2 shares, yeah, then you will get 1 bonus share. That's the meaning of this. 1:4 means what? If you have 4 shares, then you will get 1 bonus share, like that. Yeah, that's the meaning of this. So it's uniformly or proportionately given to everyone. Yeah, regularly, like that, something. Yeah, so let's take an example and understand this. See here, example, let's say in subsidiary company, first in the beginning there were, let's say, 10,000 shares, right? And then what happened was, let's say holding had 80% stake and minority had 20% stake. Okay, 8,000 shares and 2,000 shares, and then bonus issue happened, 1:2. 1:2 means what? 1:2 means, see, like this you will calculate. 10,000 are the total number of shares existing in the subsidiary company into 1 divided by 2. So bonus shares are issued. How many bonus shares? 5,000 bonus shares. 1 divided by 2 you will do. Okay, 5,000 additional shares are being issued out of the reserves. Okay, so 5,000. Now how this 5,000 will be distributed? 5,000 depending upon the stake. Okay, so 5,000 shares, you see, 4,000 shares to holding and 1,000 shares to minority interest, isn't it? See here, 5,000 into 0.80, that's equal to 4,000, and the remaining 1,000 is minority interest. So holding has right now how many number of shares? Holding has 12,000 because previously they had 8,000. They got additionally 4, yeah, bonus shares. In total they have 12,000. 2,000 additionally they got 1,000 minority interest. So in total they have 3,000 shares. You see, previously their stake was that their holding stake was 80% and 20%. Yeah, 80% holding and minority interest 20%. Now also it is 80 and 20%. Shall we calculate and see this? See here, how do you calculate the stake? It's simple. You take the number of shares they have, that is, you see, 12,000. Number of shares the holding has, and divide that by the total number of shares in the subsidiary company. The total number of shares are how much? 12 plus 3, that is 15,000. The total are 15,000, isn't it? 10,000 previously, after bonus 5,000. In total there are 15,000 shares in the subsidiary company. So divide by 15,000, that's equal to 0.8. 0.8 means 80%. You see, still the percentage of holding is same. Yeah, the percentage of shares held by holding and minority will remain the same even after the bonus issue. But when you will calculate, you have to calculate properly, otherwise you will mess up. Yeah, what I did, see properly, when I calculated this 80%, what did I do? I took 12,000 divide by the total number of shares after the bonus, 10 plus 5. Yeah, we'll discuss that, how you have to do. Yeah, the numerator and denominator has to be the same level, at the same level. Yeah, we'll discuss that right now. Fine. So this is the thing, even after the bonus and before the bonus also, the percentage of shares held by the holding and minority will remain the same. Is that clear? Yes. Now let's discuss what will happen to our holding percentage in the question, because in the question they might confuse you and you might mess up. So let's discuss that, yeah, how it will impact our holding percentage in the questions. Now let's understand how to calculate the shareholding percentage in the practical questions and what precautions you have to take and all, yeah. So you all know, just now I told you that the shareholding percentage, yeah, the percentage of shares held by holding in minority will remain the same before and after the bonus, yeah, it doesn't matter, isn't it? 80%, 20%, 80%, 20%, right? So see here, before bonus is equal to after bonus, what? Shareholding percentage, no change. And how do you calculate that? That also I have explained you. Share acquired divided by total shares, isn't it? That's what we did. See here, whatever shares the holding company has, 12,000 divided by 10 plus 5, the total subsidiary shares. Yeah, that's the way you calculate the shareholding percentage. But now what will happen is, in certain question, what they will do is, see here in this question what they have done. On 1st April 2020, H Limited bought 1,28,000 shares. In the question, they are saying exactly how many number of shares were purchased or acquired by the holding company, which are 1,28,000 shares. Fine. Now these shares are what? These shares are exclusive of bonus. These 1,28,000 shares, in these bonus shares are not included, because in all the question what will happen is, bonus issue will happen in the middle of the year, and you know it will be happening after the date of acquisition. So on the date of acquisition, these shares are acquired, yeah, 1,28,000, which are exclusive of bonus. All right, see here, during the year subsidiary company made a bonus issue of 1:2. 1:2 means 1 for every 2, 50%, yeah, 1 for every 2. How 50%? Simple. Now 1:2 means 50%, isn't it? 1 divided by 2, if we change that into decimal, that is 0.5, 50%. Fine. So 50% bonus has been issued. Fine. And then what will happen? Subsidiaries and holding balance sheet will be given to you, yeah, year-end balance sheet. On 31st March 2021, let's say subsidiary company equity share capital face value rupees 10, 24 lakh. Year-end balance sheet data is given. Year-end balance sheet data. Bonus issue has happened in somewhere in between the year, yeah, after the date of acquisition, but in between the year. So of course, you know, 99.99% of the time, the recording of bonus issue has been done. Then only the balance sheet and everything has been prepared. Okay, so in this 24 lakh, in this monetary value, in this capital, bonus issue is included. This is inclusive of bonus. Okay, so you know, all the time you will have this sort of question whenever you have bonus in consolidation. Yeah, they will not give you simple bonus question. They will not tell you inclusive of bonus, yeah. At the same level, they will never give you. Always they will twist the question like this. Okay, they will give you the number of shares acquired, which are exclusive of bonus, and here inclusive of bonus. So what you have to do? What you have to do is, see here, to calculate the correct holding percentage, which you calculate like this, yeah, shares acquired divided by total shares. When you do this, both the things, numerator as well as denominator, has to be of the same level. What do I mean by the same level? By same level, I mean both should be inclusive of bonus or both should be exclusive of bonus. See here, both numerator and denominator should either be inclusive of bonus shares or exclusive of bonus shares. You cannot do 1,28,000 divided by 2,40,000. Yeah, this 24 lakh means what? Face value 10. That means 2,40,000 shares, na? Total shares. You cannot do. See here, if you do like this, 128 divided by 2,40,000 shares. Yeah, if you do like this, you're getting 53.3333%. Yeah, this is not correct, because this is exclusive of bonus and this is inclusive of bonus. It's wrong. Both has to be of the same level. So what we have to do then? See here, we have to do conversion of denominator or numerator. That's what we have to do. Yeah, if both are at the same level, only then percentage of shares held will be correctly calculated. So what we have to do? We might have to do conversion of either denominator or numerator, whatever that you want. Okay, you can do both as inclusive or both as exclusive also. It's up to you. Okay, so the wrong solution would be like this. See here, 1,28,000 divided by 2,40,000 shares. If you do this, one is exclusive, one is inclusive, it will be wrong. This is wrong. So what we have to do? You have two options. Either make both inclusive or both exclusive and then calculate, and you will get correct percentage. Let's first try the first alternative, that is making both inclusive of bonus shares, numerator and denominator inclusive of bonus shares. 1 lakh, sorry, not inclusive, exclusive, yeah, exclusive. Let's make exclusive. Let me write this right there. It's exclusive, okay, both exclusive of bonus shares. So 1,28,000 divided by 160. How did I get this 160? It's not there over here. How did I get that 160? It's really simple. See here, this 2,40,000 shares, not 24 lakh, I'm talking about 2,40,000 shares, yeah, divide by 10, 2,40,000 shares, that is inclusive of bonus. So let's just make it exclusive. How you will do that? See, it's really simple. 2,40,000 shares, this is inclusive of bonus. Bonus shares are included in that. So what you will do? You will divide by the percentage it is right now at. See here, 50% bonus was given now. 50% bonus, 1 divided by 2, 50% we came to know. So right now this 2,40,000 is at 150%. So divided by 150, you will get what is 1%. 1% is this. So just multiply by 100, you will come at exclusive of bonus. 1,60,000 shares. Did you understand what did I do? 2,40,000 shares divide by 150, you got what is 1% into 100, that's equal to 1,60,000 shares. Okay, so 128, yeah, 128 divided by 1,60. If you do that, then you get what? Sorry, you get what? 0.8. That is the holding percentage, 0.8. Is that clear? So this way, you also know that 20% is the minority. The another alternative is what? See here, make both inclusive. Okay, make both inclusive. Let me just fix that. There is a mistake over there. Yeah, make both inclusive of bonus shares. So how it will be done? 2,40,000 is already inclusive, but this 128 is not inclusive. So we have to make that inclusive. How you will do that? Simple. Just inflate this 128. Just increase those shares by the bonus percentage. Yeah, simple. Yeah, simple. 1,28,000 into 50% is the bonus, right? So just inflate that. How you will inflate? 1.5. Yeah, 1.5 means what? 150%. So just multiply. You have got 1,92,000, which is what? The inclusive shares which you have acquired. 1,92,000. Is that clear? I mean, these are the shares you are holding as a holding company at last on 31st March. Is that clear? 1,92,000 shares. So 1,92,000 shares, 192 divided by 240, both are inclusive. So when you divide that, you are getting 0.8. You see, both ways you will get the same answer, because here both are exclusive, here both are inclusive. So both of those will give you the same answer, because we all know that shareholding percentage before bonus or after bonus has to remain the same. It will not change. Is that clear? Fine. So you have to be very careful about this. It's not difficult. It's very simple. It's not difficult at all. Yeah. And you know, mark me, every time this will happen. Okay. There is not even a single question where this will not happen. Everywhere this will happen. Yeah. They will give you like this. They will not make things easy for you. Right? Yes. So you have understood regarding this shareholding percentage calculation, how you will do about this. Either you have to make both inclusive or both exclusive, and you will be able to calculate the correct holding percentage. Fine. Don't do this way. Okay. Bring both the things at the same level, XX or in like that. Fine. Now let's go to the treatment of bonus shares in the working notes and everything, and let's understand that. You have got the basic idea and everything. So let's go to the treatment now. Now here we have the accounting treatment of bonus issue in consolidated financial statements. See, it's really simple. You all know what happens in bonus. The reserves have fallen and share capital have increased with the same proportion, right? Now two things are there. Either the bonus has been recorded in the books and it has been adjusted, okay, or the bonus has not been recorded and nothing has been adjusted. Fine. These two situations you can have in subsidiaries standalone financial statement. So that's what we have to check. Check the subsidiaries balance sheet and verify whether the bonus issue is already adjusted or not adjusted. Is that clear? Mostly 99% of the time what will happen is it will be adjusted, because bonus issue has happened in between of the year, and then you know you are doing consolidation at the end of the year, right? So of course mostly bonus issue will be adjusted. Fine. So if it is adjusted, then these are the steps that you have to follow. And you know, bonus shares are same kind of like dividend only. What we have done in dividend, right, adjustment, it's kind of like that only. Yeah, source of the dividend, we saw that pre, post, yeah, the same way. But here there's one assumption. The assumption is that bonus shares, yeah, bonus is always assumed to be paid out of pre-acquisition reserve. Yeah, in CA Inter, this is the main assumption we make regarding the bonus. Okay, we never assume that bonus is given out of post-acquisition reserves. No, we always assume pre-acquisition reserves. But if pre-acquisition reserves are not enough in the question, then only we move towards the post-acquisition. Is that clear? If it's not enough, and if the question is specifically telling you something else, bonus is given out of post-acquisition, then you will consider that. But normally as a silent question, you will always assume bonus is given out of pre-acquisition reserves, and you will reduce the pre-acquisition reserves. So let's see how it will happen, the entire chronology properly, and understand, because if I just say something, then you will not get it, of course, right? So let's see this. See here, already adjusted. The first step, you know, the entire bonus adjustment will happen only in the AOP only in the statement of net assets in our series of videos. Okay, because here we prepare statement of net assets, we take capital also in here only in statement of net asset, that's why. But if you are, you know, seeing the module and all, it's not like that. In module, every working notes are affected. Yeah, minority interest, cost of control, like that. Yeah, and if it's post acquisition, you know, bonus, then the last working note is also affected, the consolidated reserves and surplus. Okay, but here in our situation, here only one working note will be affected, statement of net asset, because we consider the capital here itself only. Yeah, equity, we consider it here only, and the effect will flow in everywhere, because at last we take the percentages, right, and that will flow to cost of control, that will flow to, you know, the consolidated reserves and surplus, to minority interest. So everything will be adjusted if we do these steps in the statement of net assets, the first working note. Is that okay? So let's start with the first step. See here, the first step that you have to follow is what you have done in the dividend. Okay, what you have done with the dividend, what you have done in the dividend, you have reversed the dividend. You remember, add back the dividend, the same thing. See here, in AOP, in statement of net assets, or you can also call it as analysis of net assets, reverse the bonus issue before the time adjustment. Before the time adjustment, you will reverse the bonus issue. See here, bonus is already adjusted. What does that mean? It means that reserves have fallen and share capital has increased. These two things have happened. It's not exactly like dividend, because in dividend what happens, only reserves have fallen. Yeah, there is no impact on share capital. Is there? No. In bonus, this is shuffling of the net assets. Reserves are decreasing, share capital is increasing by the same proportion. So there is one extra thing over here. Share capital impact is there, right? So reversing the bonus means what you have to do? You have to increase the reserves and decrease the share capital. Opposite of this, opposite of this. Yeah, see here, reverse bonus issue before time adjustment. That means what we have to do, we have to add back in general reserve in the post column. Yeah, the post general reserve, we have to increase the general reserve, because mostly the bonus is given out of general reserve, right? So that's the first priority, you can say. Actually it's not, but yeah, you can say. So add back in general reserve and deduct from the post equity. Yeah, the equity column also you will have, right? Now here the first time we will have movement in the equity. Now whatever thing we saw previously, there was no movement in the equity column. Yeah, we take equity, share capital in the beginning, at the ending, and we didn't used to take anything in the between, right? Equity, no movements, because we haven't seen anything like that. But here in the bonus shares adjustment, there is movement on equity. Here there will be pre-bonus equity, and at the date of consolidation there will be post-bonus equity. Yeah, here if it is 1 lakh, here it will be what? 1,50,000. You see, 50,000 movement will be there, like that, for example. Yes, so what you will do, you will deduct from the post equity. We'll see this practically. Don't worry, if you're not understanding anything over here, don't worry. Just after this we'll go to the, you know, one example, illustrative example, and we'll see how this will be done. Okay, add back in GR, increase the reserves and deduct the equity. Yeah, reverse this, whatever that has happened, reverse that. Why? Because the source of bonus is pre, we have assumed, that's why, and we have to apply the time adjustment, that's why. Yeah, that's why we do this. Fine. So the second step would be obviously apply the time adjustment. Is that clear? Yes, we got that. You all know how to apply the time adjustment. We will deduct from the post in the reserves and add in the pre. Fine, we know that, plus minus, depending upon the months and everything, depending upon the the date of acquisition, how many months in the pre, how many months in the post, we all know the time adjustment. Fine. And then the third step would be considering the bonus issue back. Yeah, bonus issue has happened now. There has been shuffling of net assets, isn't it? Reserves have fallen and equity has increased. So that effect will give. We reversed over here because of time adjustment and because the GR, this post GR is not the source of the bonus. The actual source would be is pre-acquisition reserve, pre-general reserve. Yeah, that's why we reverse the bonus issue. We did the time adjustment and then we have to consider back, we have to consider again the bonus issue because it has taken place. The event, bonus issue has happened. Okay, so how we will consider this back? See here, deduct the amount of bonus issue from pre-acquisition profits, but if it's not sufficient enough, then remaining deduct from post profits. For example, if bonus is of 50,000, 40,000 is only there in the pre-profits, then 40,000 you can deduct from pre-profits. Remaining 10,000 you have to deduct from the post-general reserve, like that. Is that okay? It's very rare situation, but if such a situation arises, you have to do like that. Okay, 5 for assumptions you can say. Okay, first profits will be used. Yeah, prior profits will be used. First in, first out. Yes, yeah. Then the fourth step is add the amount of bonus issue to pre-equity. You will increase the equity. Yeah, equity you will increase. Now let's see this. Okay, practically. Wait a minute. Let's just see over here also. What is this? Not adjusted. If the subsidiary company has not recorded the bonus, then this situation is not there. Reserves have not fallen. Share capital has not increased. This situation is not there. If it is not adjusted, then you will not do this. You will not do this. But you will do the second step, you will do the third step, and you will do the fourth step. Okay, that's all. Is that clear? You understood this? Easy. Now you have to practically see how this will happen, then only this will make sense to you. Otherwise, this will not make sense to you. So let's see this. See here, let me just show you. Okay, just all these figures are imaginary. Okay, it's not related to any question here. All right, fine. So see here, statement of net assets. You all know the format and everything. If you don't know, then here in this video series we have followed this format. Okay, pre-acquisition column. Okay, date of acquisition, right? Let's say date of acquisition is 31st December 2021 and the year end is 31st March 2022. This is the date of consolidation. So that means in the pre-period, what is the pre-acquisition period? Pre-acquisition period is how much? 9 months, isn't it? From April till December, April, May, June, July, August, September, October, November, December, 9 months and 3 months in the post period. Okay, yes, that's what we have. So this is the post period. All the movements will be taken over here. So see here, what we do is in this statement of net assets, we don't only consider the profit but also the capitals. Here, equity share capital, let's say it's 8 lakh. Okay, on the opening day of the year, not on the date of acquisition. This is on the opening day of the year, 1st April 2021. Okay, general reserve 5 lakh, 1st April 2021. P&L account 6 lakh. Let's just say it's given in the question. Okay, it's given in the question. Let's see. So we will see the movements. Okay, we'll see the movements and the closing. The closing data will also be given. So you will compare and you will see the movements and you will take the movements in between. Yeah, 8 lakh, 9 lakh 60 means 1 lakh 60 movement is there. 1 lakh 60 is the bonus. Okay, bonus value I will write over here. Let's just say the bonus is of 1 lakh 60. The monetary value entirely it's given. Fine. So bonus is of 160. Let's say. So bonus is given out of GR, right? But you will not come to know that in the beginning only. See here, in the beginning, see here, 5 lakh opening is there, closing 340 is there. So the movement in GR, the decrease has happened of 1 lakh 60. And the question is saying 160 bonus. So 160 is given out of GR. Is that clear? Yes. So now P&L account, 6 lakh, 8 lakh, 2 lakh increases happened, the current year profit. Is that clear? Yes. So these are the totals. Fine. Now the first step that we follow is what? Reversal of bonus issue. And reversal will only happen when accounting of bonus issue has already been done in the standalone financial statement of subsidiary company. Yes, if it is already adjusted, then only you will do the first step, reversal of bonus issue. What is reversal of bonus issue? Nothing. It's really simple. You will just add back in the GR and you will deduct in the equity. Okay, you will reverse the bonus issue as if bonus issue never happened. Okay, 160 plus 160 minus. nil. Is that clear? This is what you will do. See here, I have written over here. Add back in GR, deduct from post equity. Add back in GR, deduct from post equity. Is that clear? Yes, we got that. And then you will apply the time adjustment. Time adjustment was what? 9 month pre and 3 month post, right? So 9 month pre, 3 month post means what you will do? In GR there is nothing. Yeah, in GR there is nothing, zero. It has become zero. But in PNL, post PNL, we have how much? 2 lakh. Now of this 2 lakh, some profits are of the pre-acquisition period. Some profits have been assumed to be, earned in the pre-acquisition period. So what you will do? You will calculate how much is that? Yeah, 2 lakh into 9 by 12, that is 1,50,000. Subtract 1,50,000 from here and add it in the pre-acquisition. You all know that. Yeah, this is time adjustment. This is not related to bonus. It happens in, normally in every question. Yes, if time adjustment exists. If it is not there, then of course this will not happen. You will do this and you will come over here. Fine. If time adjustment is not there, then you will skip the step 2. Yeah. Fine. So after the time adjustment, see here, 2 lakh minus 50,000, and here this is nil, nothing. Okay. And then 19 lakh, okay, this total 19 lakh here, then the time adjustment which you have added over here, it became 20 lakh 50,000. Now this is the position you are in, right? This is the position you are in. Now what you will do, step 3 and 4. What was step 3 and 4? Considering the bonus issue back. Yeah, deduct the amount of bonus issue from pre-profits. Why sir? Why pre-profits? Because we always assume bonus is given out of pre-acquisition reserves only. That's why. Okay, fine sir, we got that. So minus GR, yeah, I mean pre-acquisition general reserve you can say, but it doesn't matter. You will only deduct from over here 1,60,000. Okay, 1,60,000 minus, and you will add back, you will increase the equity. See here, add the amount of bonus issue to pre-equity. That means in the pre-acquisition net asset, in this column you will add back, yeah, 1,60,000. So you see, this is completely illogical actually. I mean, why are we doing this? It's having nil impact, isn't it? Here also it had nil impact. Here also it had nil impact. Minus plus. Yes, that's what bonus is. It's just shuffling of the net assets. Nothing actually happens because of bonus, really. Yeah, it's just shuffling of the net assets. Reserves decreases with the same proportion, share capital increases. So the nil impact in the net assets, is zero. It's zero. Even if you consider this as post, if the source of the bonus, if you consider that as post, then also there will be nil impact only at the consolidated balance sheet level, because it's nothing but just shuffling of the net assets, but if you consider bonus to be given out of post acquisition reserves, then one major impact will happen. One major impact is the cost of control will be affected. Yeah, normally also cost of control will be affected, but here it will be affected differently. Okay, it will be affected differently because see, if you consider it from the post acquisition, then it will be deducted over here, right? In the GR or in the PNL, it will be deducted like that in the post acquisition reserves. Then what will happen? This things will be changed and this thing will also change, right? That's why. Now this is the way you do it. Okay, always assume to be of pre-acquisition only. Okay, and at the C&L level they will never give you post and all. It's always pre-acquisition only. Fine. And then you don't have to do anything else in the other working notes, because what we do, when we take the percentages, holding and minority 80%, 20% of these amounts, yeah, this P&L, everything gets adjusted, because this working note is not just AOP, it's not just analysis of profits, it's statement of net assets, analysis of net assets. The capital is considered over here, so everything will be adjusted when you take share of this. Yeah, when holding share will go to cost of control, and minority, both the shares. In this there is capital also, there is profits also, so everything will be adjusted. If you just do this in this working note, you don't have to do anything else in cost of control additionally. You don't have to do anything else in additionally in minority interest, because if you take this 4,10,000 and 10 over minority interest, working note is over. 4,10,000 plus 10,000, that is 4,20,000. That's the minority interest. Is that okay? Did you understand? Yes. So this is how you have to treat the bonus issue in consolidated financial statement. You will only give the effect in statement of net assets. But if you're preparing just analysis of profits, which they do in the module, yeah, just the profits analysis, then you have to give the effect separately. the capital effect separately in cost of control, in minority interest, like that. Okay, is that clear? So this is how you have to do it. Okay, first reversal as if bonus never happened, time adjustment, and then considering the bonus issue back, increasing the equity. Because see, how will you consider this way, right? You will deduct the reserves and you'll increase the capital. This way you will consider the bonus issue back. Yeah, is that clear? Add the equity, increase the equity, deduct the reserves. Is that clear? Fine. So that's it for this video. See you in the next video. Bye. I think you have got this easy, right? Yes, that's it.